Well, thank you, everyone. Thank you for your interest in today's session. We're going to present an issue that I put forward as something that I've faced as a corporate in terms of cross-border challenges in payments. The Bank of America presentation this morning touched on this as well. So I was very keen to see that Dean Henry was on the same page and had sort of the same vision. My reference to operability is not a misnomer. It is today interoperability, as everyone refers to, but I have this utopic vision that someday we will have this universal global exchange system that facilitates this corporate need. But we are really talking about interoperability today. So first off, my name is Bill Piggot. I am the Vice President, International Money Movement for ADP. But before we get into that, we'll talk a bit more about that in a sec. I want to introduce my esteemed colleagues. I have Stephanie Z, currently Director and Global Regulatory Head for Citibank, and current active CPA board member. So Stephanie. And we have Lisa Shields, an entrepreneur, fintech provider, founder of Hyperwallet, and now a board member for that firm, and just about to launch her next fintech in the midst of it, actually, FiSpan. And she'll talk about that as well. But in terms of ADP, some of you know us, some of you may not, but we're a large global HR payroll company with we have 630,000 clients, we have 36 million people on payroll globally, we pay $1.8 trillion annually we move on behalf of our client payroll needs. And the issue that I bring today was brought forward by some of our clients, and we'll get into that. But we've been on a journey in terms of rebranding ourselves and reinventing ourselves, which was key. And with that, we call it the ADP branded client experience, refocus from the client's lens on effort and trust and building from that client need perspective. We've heard in the other sessions about not losing sight of pain points in your products, ending up like a dinosaur, as we heard, and I'm not gonna mention Blockbuster anymore, it's been said, but there's other companies, there's Kodak, there's many of you who remembers Digital Equipment Corporation, DEC. DEC was the second largest computer company in the world in 1985 to 1990. My kids wouldn't even know who they are. Nobody would know who they are today, which is unfortunate. So, but in that, in focusing on the client lens, our CEO has also challenged us to look at it from our strategic pillars. He's coined the phrase, simplify, innovate, grow. And in that simplification, finding new ways to better serve our clients, to reduce complexity in our own systems and efficiencies and automation, et cetera. Taking that, using innovation to build out technology that will further add added value services to our clients, and then transferring that into growth from our clients' vision and their perceived value, as well as our own growth as a company. But I'm here today because, as I said, some large global clients did come forward expressing a need for a global payroll offering or the ability to produce payments in multi-locations, multi-countries, across borders and across currencies. In that, they expressed, as I feel too as a corporate, the challenge that can bring sometimes, traversing this myriad of payment systems. We have NACHA, we have CPA, the clearing in Canada, we have BACS, VocaLink. In the UK, we have SEPA, and I'll give credit to SEPA because they've done first step in bringing to the world a simplified, unified structure using the SWIFT-based XML ISO format, which I see as a key component to this future utopia that we're going to speak about. We have Australia Payments Clearing as well. So once you get into these markets and different currencies, it becomes a real challenge for a corporate. And gave rise to some business opportunities, which Lisa's going to speak to as well. But in terms of that corporate need, this traversing of payment systems, the ability to have straight-through processing with an automated format, it just really isn't there from a corporate perspective. It's starting to emerge, and it's starting to emerge with niche players, which will come out. But I feel well served as a consumer. I can buy Amazon.co. I can buy on Amazon.co.uk and have it delivered to my house and use PayPal, Amex, Visa with currency translation. But as a corporate, I'm pretty much bound to wire systems in many respects. I think they made a change. Did you get it too? They're trying to insert our polling questions, sorry. So, but it's just not there. Having to use LVTS and RTGS in Europe and CHAPS in the UK and finding ways to deliver payments sometimes on volume is not easy. And Dean Henry, as I said, at Bank of America, expressed it well. But this took us on a journey, this need to look at this client service that we could potentially provide. That took me on an 18-month journey, which took me to the UK, to New York, to London, to Shanghai, China, Melbourne. Brought me to Citibank. Citibank is one of 3 major global banks I can see that offer a true multi-currency, multi-country, cross-border payment service. Plus, it brought me to some niche players who were entering the market, Earthport, FC Exchange. I met Lisa at FinPay and in the Department of Finance FinPay committee and was very impressed. This woman had the foresight 15 years ago to create a service in Hyperwallet to build corporate payments, cross-border, cross-currency. Phenomenal. And now on to her second venture. So in doing that, this is this future evolution I see. And we mentioned the XML standard that SWIFT has put worldwide. And that is, I believe, one of the first steps towards this in terms of standardization. Jerry spoke about it this morning. If you saw when he was interviewed by Amanda Lang, this need for standardization in this space, in payments. That's what drives interoperability in my view. So we have this global growing corporate need. Commerce has gone global. Most companies can easily transact in other markets, but need ways to make those payments. We see the banks starting to get into that. Some large corporate banks are in the space already. They have partnered in the B of A presentation this morning. Dean Henry admitted that they have partnered with Earthport. Earthport is a unique UK player that has entered into many of these markets. We have Hyperwallet, we have FiSpam, we have FC Exchange. Jerry alluded to this too. The next piece of this is compliance. Compliance and knowing your client, KYC, anti-money laundering, that regulation also poses a challenge in that market. So I was very excited when I saw this morning the speaker that talked about identity and ways to automate the identity and knowing your client, right? Some of you may know the OFAC IAT rules, which restricted payments even going from cross-border Canada to US. It turned out the lights on our presentation even, it was so difficult. So, but Charmaine's got it and she's on it. So but with that, I see this future utopia, I call it. I see SWIFT as a part of that. The next piece of that was providing, above all, underpinning with safety, soundness, security of the system that it builds out this interoperability. Of course, that's key. So when we saw in some of the blockchain payment systems, even gold money, that was unique. Distributed ledger, fixed closed-end loop system, using gold as a currency exchange base. That was pretty exciting. Never thought of that. But evolution continues. And Dean said it too this morning that he's very hopeful, as am I. We're on this budding edge of new technology that will bring this global operability as I see it. So with that, I have a polling question I'm going to ask you. Please get out your phones. You can't do it. But I want you to look at this from a corporate perspective. As I said, I feel we're pretty good from a consumer, and it's still growing. Consumer in terms of mobile payments and all different avenues. But in terms of a corporate, to get this cross-border functionality, how do you feel it's best served? Do you think it's best served directly through a niche provider like FiSpan or Earthport or Hyperwallet? Do you seek to have it in your corporate bank relationship? Is that the best way? Or is it a joint offering? Are you open to that between an intermediary and the corporate bank? So that was the question. Coming up. Okay. Good. Now, as a corporate, I see that as well. I think partnering is the way to go and to bring this forward. But in terms of that relationship, I have typically my interfaces with my corporate bank, right? So I do see the partnering happening. But with that, I'm going to turn it over to Lisa, who I told you has been in this field and innovative for over 15, more than that, years. So over to you.
Thanks, Bill. It's my people hear me? Chuck? Great. Okay, so, right. Okay, good afternoon, ladies and gentlemen. It's really quite an honor for me to be here today and share and solicit some ideas with you. What I'd like to do is follow up Bill's perspective by highlighting some of the learnings and observations that I've made in 15 years in the industry as an independent service provider, and outline my ideas of where we can go together as an industry over the next decade. So I like to sort of start with a bang and put out my thesis, as controversial as it may be. So this slide outlines right, the core of my position. And really it's enunciated in that first sentence, which is today, and this may be a little bit contentious, but I actually do believe that Canadian businesses are currently disadvantaged in the marketplace over their versus their international peers by aspects of our payment system and the way we operate today. And that they will be further disadvantaged in the marketplace unless we can put our heads together and our organizations together to find cohesive solutions moving forward. And to give an example of what I mean in practice, think about for a Canadian business, making US ACH payments, making and accepting US ACH payments, and making and accepting US card payments should be considered a de rigueur service. It shouldn't be an add-on that you need to go and think about and get a specialized niche product. It's just something that every business needs to do. Yet Canadian businesses themselves don't expect these kind of services because they typically haven't had access to them in the past. So instead of talking about problems and listing examples of where I think things are wrong, what do we really think about moving together, and how can we service our customers better? Well, first we need to realize a few facts, right? And the first fact that I'd like to make the first point I'd like to make is that corporates are willing to engage and utilize third-party independent services. And interestingly, what we found at Hyperwallet was the larger the corporate, including public organizations, were in fact more likely to be willing to work with MSPs and third parties. And what we realized versus sort of mid-market and smaller SMBs, and that was really because of their ability to control risk in customized ways through things like unique contractual clauses and potentially through financial mechanisms in partnership with their banks or other players. All things being equal, of course, that corporate would prefer to work through their financial institution. Okay. The second point I wanted to make was that corporates who do choose to utilize third-party services today are incurring penalties by choosing to do so. And the first and most obvious penalty for everyone to recognize is efficiency. The clearing times and data batch processes that are currently utilized by all corporate services serve to disadvantage the corporate and the independent payment service provider delivering those services. And so this time period where funds finality and funds availability are unknown, makes it necessary for corporates and service providers to adapt their back-end processes to account for this. And the third and final point, and I believe that we should be talking about ways to overcome that penalty, because there is going to be need for corporates to adopt independent services to meet their requirements. And the final point I want to make is probably more controversial, is that our national interest will be served if we put our heads together and figure out an operating protocol and government structure that will allow qualified non-FI providers to have direct access to our payment rails. And my argument for taking this position is that the world is too large and the payment innovation in core clearing is too great, and the breadth and width of applications that need to be built on top of core rail innovations over the next 10 years are too great for us to reasonably expect that 12 entities, all banks, can be entrusted to meet this need. I don't think it's fair to the banks themselves. I have the opportunity to, in this platform, to state my view, and the polling questions let you respond and see how close or against the market I actually am running today. And I apologize because I was too wordy, so my questions actually had to get abbreviated by the CPA. And so the questions really are, what do we feel is the best way to help our corporate clients succeed and compete on a global basis? And I'll outline some of the rationale between each of the choices that I listed. The first one was support current industry initiatives more fully. And the logic behind selecting that one would be innovations like ISO 222 and multi-settlement cycles per day can actually go a long way to enable new services. And these should be allowed to take hold before we entertain more radical concepts. The second one, prioritize international banking partnerships. And the rationale for that might be that Canadian FIs can facilitate account introductions to their European and US correspondents. And then clients can gain access to a larger pool of fintech innovations in these jurisdictions through third-party relationships. The third is the one that I favor, which is standardizing mechanisms for corporates to independently adopt third-party services in an efficient way. Or accelerate non-FI access to our payment rails, getting more sort of along the radical spectrum. And then if there's somebody in the audience who has a better idea, I'd love to hear about it later. So please select that option and I'll buy you a beer. Okay. And take your time to select. Okay, so a little background about, so next slide, right. A little background.
Oh, no, the results will come out.
No, they have to give you the answer.
Oh, we have to wait?
You're gonna get right now.
Ooh,
Get the beer ready.
I don't know if I can go back. Okay. So we're waiting for you.
I think so. My results came up right away. He's trying, the link's not working.
That must mean that everybody voted for direct access to third
Party
parties
rails,
to the
yeah.
rails.
Lisa wins. Or maybe just go next slide.
Yeah, I think I'll just move on.
Yeah. It keeps going
Not going to
back.
let you.
They
Because
keep
they have to
overriding
jump
me.
back.
I think I'll just move on.
Are
Oh,
they on the
there's
polling
also the
thing?
phone.
What it came up? Brenda, you tell us.
Just tell us. Yeah. Okay. Okay, so support current industries more fully is the winner at 46%. Surprisingly, standardized mechanism to independently adopt third parties and accelerate non-FI access to the next time rails come in at sort of 25% each. So nobody thinks it's a good idea to prioritize international banking introductions for your clients. Thanks very much for that.
Thank you, Brenda.
So I'll try and race through a little bit of background about Hyperwallet. Hyperwallet is a mass payout solutions. We're a B2C global payment provider. Today we process about $5 billion of annual, $8 billion of our annual volume on our rails. We have about 5 million payees. Most of our clients are US multinational marketplaces. Think of Mary Kay, who needs to pay their sales force around the world. Think of modern marketplaces like Uber that needs to pay drivers. These are the kind of clients that Hyperwallet services. We operate in about, we're integrated with about 30 different ACHs around the world, which gives us access to quite a large number of direct endpoints. About 70% of our volume traverses our global on-us ACH. 30% of our volume gets delivered to instant issue prepaid cards for unbanked beneficiaries. But interestingly, the transaction ratio is higher to instant issue cards. So I was very surprised by this, but North America and places that you wouldn't expect it, Europe, prepaid cards are very, very popular for low-value payment delivery. So a little bit about FiSpan. FiSpan is a brand new company. I just incorporated it last month. And my goal there is actually to act as a trusted third-party integration for financial institutions and corporates who want to adopt third-party services. So I'm getting the yellow light, so I'm going to have to really move quickly. So to buttress my argument that global payments are too big for any single player. Today, as Bill mentioned, there are services like Hyperwallet, like Citibank, that are available to interlink ACHs to a pseudo-global ACH. But no one player can service both high value and low value, B2C, B2B, and consumer payments. So this means corporates tend to need to go to more than one provider, and this leads to complexity in their back office management systems. Interestingly, what is also too big for any one player is the application needs and the verticalization of the service of international payments or any other kind of payment clearing. And what we see at Hyperwallet is the status quo has evolved from applications to APIs. It was relatively easy for us as a SaaS payment provider to have a very compelling payee and payor experience and deliver real-time status notification, delivery notification, very low price point, because we controlled the applications that both payor and payee were using, as well as the network endpoints. That becomes harder to deliver when you move to APIs, because the complexity around global payment we could hide within our application and our own business logic. When you expose that to third parties, which corporates are increasingly demanding, it becomes a real balancing act of how granular to make those. So we're still learning. Interestingly, the thing that we're also seeing come into demand from corporates is things like service provider portability and data sovereignty. And these are innovations that were first introduced on the merchant acceptance side of payments. And that's where I really see a lot of innovations as being introduced and only adopted by us in the corporate side of the business sort of a decade later. The example I like to use is Stripe and Square, where people think that it was the whizzy little device or it was their beautiful, elegant APIs. But in my view, that wasn't the innovation. The innovation was instant customer onboarding and backed up by graduated and continuous underwriting. And we do not have an analogy in corporate services. We tend to still have manual onboarding, manual KYC, and manual regulatory monitoring or semi-manual regulatory monitoring going on in the background. And this is impeding the speed at which we can deliver innovations to the marketplace. That actually wraps up my talk right when the red light goes off.
Perfect.
So I'll pass it on to Stephanie, who will provide the bank perspective.
I feel like I'm the minority with all the fintechs here, being a big bad bank.
Yes.
So I'm Stephanie Z, and I'm with Citibank. Not working. Am I up? I'm the Global Payments Regulatory Head for Citibank, having moved into the role earlier this year. I'm going to give you a little bit of my perspective on global interoperability from the big banks' perspectives, talking to customers, and some of the things that we're seeing around the globe. To give a little bit of perspective on Citibank and Citibank in Canada in particular, we've had a presence in Canada since 1919. We are predominantly a corporate bank in Canada. Our clients are Fortune 5,000 institutions. So we have very little retail or B2C presence, not only in Canada but around the world. Just to give a little bit of framing as to where my perspective comes from. So Citi's a huge organization operating all around the world, 163 countries, 100 plus currencies. So we have a lot of experience and a lot of understanding of our major corporates, such as ADP, and their requirements around the world. And it does vary from location to location. So when Bill asked me, to speak with him on interoperability, I had to ask the question, what do you mean by interoperability? There are many layers of interoperability as we talk to our clients and we look internally and externally. There's interoperability with regards to what does a corporate do? So they have multiple payment types. They have checks, they have ACH, they have wire, they have multiple business lines. All of them send information into the treasury team in a different way. How you format, there's a focus on internal corporate interoperability amongst the payment types, amongst their business lines, and amongst their affiliates, both domestically and across the globe. When we talk about interoperability across the globe, from a corporate's perspective, they operate and they deal with multiple financial institutions, and they want interoperability as it relates to, I want one file format out of my institution, and I don't care which bank and how many banks I deal with, and I want that to be able to extend into all of those,
Yes.
tomorrow, please, into all of those avenues. And as we know in the correspondent banking and in the bank, to be able to execute payments, we go through correspondent banks, and everybody has a different standard, everybody has a different process. So there's also interoperability bank to bank within our own process that we have to address and deal with. And then there is also an ask from our corporates, which we'll go into the next slide as well, is are you concerned about end-to-end interoperability? Meaning, whoever you're paying or whoever you're receiving dollars from or paying to, they need data, they need information to be able to reconcile, to settle that payment, or to be able to ship the goods, or whatever be the case, depending upon which end of the transaction you're on. And are you concerned about, and do you want, and do you need end-to-end interoperability so that it goes right from my ERP system with all the shipping and all the data and all of the invoice information through all the bank chain back into whoever the recipient is, into their ERP system for straight through processing and straight through reconciliation? Yes.
Very good.
So when we look at the lens of those three, oh, my question should have come up. Perhaps not.
After.
No question.
No, go. Might be at the end then. My question is what are you focused on? Where's your greatest priority or concern around internal corporate within my walls of interoperability with regards to all of the banks you deal with across the globe? And is your priority to ensure that your reconciliation, that straight through STP, STR through to the back end, the end recipient, is your priority?
We're getting some results.
So it is about the end-to-end. So you in the room are more concerned about that interoperability right through to the back end of the client, the other end of the transaction. Not so much about, so you deal with your own internal noise differently.
Yes.
Thank you for that. Oh. How do I go back? There we go. So I've already touched on some of these, and Bill did as well, and Lisa touched on some of these as well. But what we're hearing from our clients and what we're seeing across the globe, and what everybody frankly at this conference is trying to address, is we want greater efficiency. We want that straight through processing. We want to be able to have enhanced data going all the way through. We want it fast where it's appropriate for it to be fast, and we want transparency as it relates to where's the payment, where's the information, and how long is it going to take to get there. And of course, everybody wants it near free, and take cost out of the process, and have that ubiquity that Bill was talking about, it regardless of who the corporate deals with, regardless of whether it's a domestic or a global bank, end to end. But realistically, you can't have it all, right? It's sort of that, project management, you have time, cost, and quality, but you can have two, but you can't have three. So my next question is what is it that you want? What's your greatest priority of these elements? I should have a poll question up as it relates to that. So it is about STP.
Yeah.
So straight through, no stop, etc. The enhanced data is very, it's interesting because in the last question, you wanted end-to-end with regards to the data for straight through reconciliation to the endpoint, but you actually want, in this, with regards to prioritization, it's around straight through processing of the payment. So very interesting. Thank you. So I think, you've heard through this conference and through the balance every single day, the market, the ecosystem is responding to your needs and your wants. There are value-added solutions that are being created every day, either through an API or from your financial institutions. And the infrastructure modernization is happening on multiple layers as well. It's happening within your own corporates as you move towards enhancing your ERP system, whether it's SAP or Oracle or what have you. We've heard today from multiple jurisdictions, the FMI, the financial market infrastructure, is modernizing their elements in their infrastructure, and banks are also going through this transformation of infrastructure modernization to all facilitate and respond to your client needs. We have new entrants, like multiple, we've heard from at least a dozen or more new fintechs through this conference, Lisa, et cetera, trying to respond to your needs to be able to get to some of those friction and those pain points. But at the same time, we have regulatory pressures, not only forcing that innovation and forcing access, but there are also regulations imposed upon us to ensure and facilitate safety, soundness, and security with some of the things that we've seen in the last, even in the last 60 days. And that is all trying to address interoperability, enhance interoperability, but also protect ourselves from some of the risks that are created by interoperability. And so when I look at what is happening in the marketplace, not only in Canada, around the world where Citi operates, and there was some discussion about that earlier this morning, all of the great fintech companies are trying to address a specific or a handful of use cases. But is it enhancing and getting you to STP, which is what you've just indicated that you're looking for, or is it creating some fragmentation because the fintechs are operating either locally at a point in time, they need scale to be able to address, but we've got corporates like Bill and many others that we deal with that operate in 50 countries or more, where that fintech company has not yet that scale. So each country trying to adopt a particular API or a particular service may be creating fragmentation rather than facilitating. And that fragmentation then creates the inefficiency, which is the thing that you've just indicated you wanted. But there is also, again, we've heard through this conference, heightened risk. We don't know where the code comes from. We have now introduced multiple more access points into our host system. So banks have to deal with that. We're not going to give you access direct to the back end databases and the systems. So we have to build some in some layer and some boundaries. And so now there's a replication process, a validation process, a cleansing process in order to ensure that that payment now can process. And regulatory resilience is, regulations around the world in every single country, in every single jurisdiction, is trying to address the needs and the wants, the fintechs, the new technologies, but also, as I've already mentioned, security, safety, and soundness. And every single country is different. You can turn it, it's almost the same, you can turn it 5 degrees, but it is slightly different. And that makes it very difficult to get to that STP, STR in the manner in which Bill and all the other corporates would want. So,
excellent. Well, before we turn it over to you, I'm going to ask them some contentious questions to see if we can get them interacting. So, Steph, do you think the global markets are ready to have partnerships and welcome the opportunity of a FI-SPAN type service and to expand your own? Is it better to build in-house or to expand through a partner?
I think there's no question that partnership and collaboration is the way forward. I think that they are, but I think it also depends upon what the use case and what problem you're trying to solve for which segment of business you're trying to solve it for. And in the corporate space, it's a little bit more difficult just because of the breadth of where the corporates are and the nature of the operability that you're looking for every country you operate in, and that particular jurisdiction's challenges, regulatory, infrastructure-wise, et cetera. Each one is unique. Yeah.
Now, Lisa, do you feel as a fintech, and with your size and your ability to start new and fresh, do you see yourself as more nimble and agile, able to address certain markets more than a giant like Citibank? Or
Well, I mean, I'm not sure if I'm on, but that's a given, that, that a fintech sees itself as, probably me. Yeah, that was me. It's given that a fintech sees itself as nimble and able to innovate. But I was told by a finance person about 2 weeks ago that the only thing a technology company has in its favor is its ability to be nimble. On every other metric possible, you're a detriment. So you have to, we as the technology and the fintech players in the marketplace, we have to understand that. But to get to the core of the issue, if a corporate wants straight through processing, and they want end-to-end connectivity and they want end-to-end reconciliation services, my view is that the aspect of providing the triumvirate of those services shouldn't fall to the bank. And in fact, even with individual endpoints who might be different technology service providers in different markets, that by cooperation and through APIs, those can actually be provided to the corporate to stitch together that data from disparate players, and that in itself is another fintech service to be layered on, and that none of this can happen until we can figure out a way for I almost want to call them demilitarized zone third parties.
I like that.
To have controlled access to either banking platforms or corporate platforms using the existing data flows that are in place today from the bank to the corporate. So there are a myriad of different ways we can go. My personal preference is to have, what did someone else say to me the other week? Access to the aorta, so I can rip all the customers out of the bank and steal them and move them someplace else. That's actually, no bank will ever give you access to their fundamental banking platforms. And that's why I'm sort of changing my thinking. Okay, well, what about a designated multi-access account where a corporate opts in, right? And it's a segregated account that only has certain amounts flowing to it. But in some way, both the data has to be able to flow back and forth to the corporate and its designated service providers, and an indication of the financial attributes of that institution with its bank, in order for this end-to-end triumvirate, right, straight through processing, end-to-end connectivity, end-to-end reconciliation to be possible.
Good. I'm going to ask you both, are you as hopeful as I am and Dean Henry that there's this next global gateway network? Maybe it's SWIFT. Maline's out there, I think we can get to. But XML standardization, having a consortium of banks forming a global gateway, perhaps using SWIFT or an R3 type network, do you see that as a potential future evolution?
I think it's certainly a stepping stone for sure. It's trying to take the friction points out of and address a step at a time some of those issues. So with GPII, their solution, right? You're going to get some transparency. You're going to get greater efficiency. Ideally, there's some cost reduction in that. So it's trying to create that global alignment between the disparate banks and the disparate regulatory jurisdictions and the disparate financial market infrastructure challenges, and try and bring some of that together to try and get to that STP and STR. I think that's a step. I think we're on a path, and I think that there will be roles for fintechs and other elements to enhance that position. But it's a great first step.
Right. How about yourself, Lisa? What do you feel?
I think that a global third-party clearinghouse, if we're talking about, or more modern clearinghouse, is a great innovation. I see the biggest impediment and the biggest opportunity around onboarding, the sharing, the appropriate data flows around information about the corporate, and transaction monitoring as the most interesting problem to be solved before any of these innovations can really flourish.
Very good. Now we'll turn it open to you. Any questions in the floor?
Just a comment as much as a question, but in defense of financial institutions, I think something to recognize when it comes the aorta is that it's not that the financial institutions won't allow access, it's that they can't allow access. In many cases, you have to have many hundreds of millions of dollars tied up in collateral, pledges and so forth, in order to be able to operate on the fundamental payment systems. And so who's going to expose themselves to the regulatory risk of allowing that? What regulator will allow them to do that? And are fintechs prepared to put up a few $100 million in order to have access to it?
Oh, yeah, one alternative is the UK system, where it's a sponsored gateway, where you as a financial institution would sponsor a large corporate to have access, direct access. I'm not sure if that would satisfy your need, but I think you're looking more for direct rail access.
So my position, and it's actually, the good part is that I'm now able to be completely free and frank about my opinions because
you're an entrepreneur.
Well, no, because my organization is not one that would ever want that. But to answer your question, I do think it is very important for there to be independent third-party direct access. And I think that the knife cuts both ways, that a qualifying independent would have to meet safety, soundness, capital adequacy, and all those other requirements in order to qualify. And so yes, it would reduce the pool of perspectives to a much smaller number. And so I see the right mode as a duality of access. One, direct access, which is available to someone if they want to go raise $300 million, put it up as collateral, have all the subject themselves to formal regulation, and also bank sponsored. And I think those both should reasonably coexist.
Excellent. There's another question over here.
Yes, my question is a little similar to in that if that type of access that Lisa was mentioning would be satisfied through a PSP2 type of regulation that would allow third-party providers to have access to that to the accounts of the end users to then be able to leverage or to interact with the core system and compete in a way with similar services offered by the financial institutions.
Sorry, I'm not sure what the question was.
If you would see that.
Oh, yes. I mean, I think that it would be fantastic, quite frankly. But it would be unfortunate if it had to be imposed through a regulatory body, right? So my desire would be for us to figure something out as an industry that would not result in regulators taking action like they have in Europe.
Very good. We have the red light. So thank you. Thank you for your patience with our technical issues too, and thank you for attending today. Very much appreciated.